In this video, I'm going to take you through the entire home loan process step by step so that you know exactly what to expect. Hi, my name is Roma, and today I'm going to show you how to get a home loan. Now, there's a lot of information out there on the internet, and it can be confusing trying to figure out where to start. That's why I've created a video series for buyers to take you through the entire process step by step so that you know exactly what to expect. And in this video, we're going to be talking about the pre-approval stage of getting a home loan. So let's get started. I've covered in my previous two videos the two steps you need to take before applying for a loan. I've covered the importance of a good credit score, what a down payment is, and the importance of having money saved up before you even apply for a loan. If you haven't watched them, click here for my buyer's guide series. The mortgage process can be confusing and complicated for many people, but it doesn't have to be. In its simplest form, a mortgage is nothing more than a loan that is used to purchase a home. The vast majority of mortgages are issued by banks, credit unions, or other financial institutions. And the first step, the borrower applies for a loan and provides all the necessary documentation. There are a few different types of documents that you will need to provide to apply for a home loan. These include proof of income. This could be in the form of pay stubs, tax returns, or other financial documentation that shows how much money you earn on a monthly or yearly basis. Proof of assets. This could include bank statements, investment account statements, or other documentation that shows how much money you have available to use for a down payment and closing costs. Proof of employment. Lenders will typically want to see proof that you have been employed for at least 2 years, such as an offer letter from your employer or pay stub. Good credit history. Lenders will pull your credit report to see if you have a history of making on-time payments and managing your debt well. The second step in the loan process is the loan officer submits the application and all the financial documents to the underwriter. The underwriter reviews the application and decides whether or not to approve the loan. This would be a fully underwritten pre-approval when the underwriter reviews the borrower's financial information to determine if they are eligible for the loan and what the terms of the loan will be. The underwriter will look at factors such as credit history, employment history, and income to make a decision. If the borrower is approved, they will be given a loan agreement that outlines the terms of the loan. The borrower then has the option to accept or reject the loan. Third step, the borrower accepts the loan and the conditions of the loan. They will sign the loan agreement and make a down payment if required. Once all of the paperwork is completed, the loan will be funded and the borrower will make monthly payments until it is paid off. Like I said before, this would be a fully underwritten pre-approval. There is another type of pre-approval. That's when a loan officer gives you an estimate, with emphasis on estimate, of how much you may be able to borrow based on some questions that the loan officer may ask you. This can give you a better idea of the price range you should be looking at when shopping for a home. Keep in mind that a pre-approval is not a guarantee that you will get the loan until an underwriter has looked at all your documents, assets, and debt. Of course, many other details can be involved in the mortgage process, but these are the basics. If you're thinking of buying a home, it's important to understand how mortgages work so that you can make the best decision for your financial future. If you're thinking about buying a home but you're not sure this is the right time is when you are ready to purchase a home. The real estate market is always changing, but investing in your home is the best investment you can make. Remember, right now, you're either paying the mortgage for someone else or your mortgage. Okay, see you on the next one.